Well, it's 10:05. I don't want to take up too much of your time today. I know we're all super busy, so I'm going to go ahead and get started. Thank you so much for tuning in today. And again, I'm Sarah Dotson with Prosper Insurance. And today's CE course that we're doing is going over flood insurance briefly and reading elevation certificates and understanding more about the elevation as far as the high-risk flood zones are concerned. If at any point during this you have a question, please feel free to stop me and ask. This is super informal, so feel free to stop me and ask a question. Because I'm sharing my screen, I can't really see the chat. So if someone throws something in the chat, maybe someone just stop me and I can read it. So today, if you do have on your camera, you will receive CE credit for this class, and it will be for a flood CE, which as a realtor you're required to have. If you don't have your camera on, you can't get the credit. You'll just be receiving the information, which is totally cool too. But you used to not be required to get a CE credit of flood insurance as a realtor, but that changed a few years ago. In 2012, Congress passed the Barrett Waters Insurance Reform Act and had a really big impact on the industry and on real estate values. There may have been something that happened that tripped up one of your transactions or made someone not qualify for a loan due to the fact that the home was in a high-risk flood zone. There was a high premium. I mean, Ashley, you were just saying that, you know, you guys decided to back out of the contract because of elevation of a property, correct?
Yes.
Yeah. So it's something, unfortunately, that has been happening over the last several years. I don't really want to bore you guys with a bunch of forms and coverages. Instead, we're going to talk about things that you can do to be aware of to possibly prevent stumbling blocks as an agent. If you get into a transaction, whether on the listing or buying side, you know, if there's an expensive flood rate, what your options are. And we're also going to take a look at a couple different elevation certificates in a little bit, and something for you guys to look out for, you know, when you're looking at those. So quick little overview of, you know, FEMA's definition of a flood. I'm sure, and FEMA stands for the Federal Emergency Management Agency. I'm sure all you guys are super aware of their definition of a flood. It's the general and temporary condition of partial or complete inundation of 2 or more acres of normally dry land, or of 2 or more properties impacted, and at least one which is the policy holder for the flood insurance policy. And it could be from overflow of inland or tidal waters, unusual and rapid accumulation or runoff of surface waters, mud flow, which mud flow is defined as a river of liquid and flowing mud on the surfaces of normally dry land areas. So other earth movements such as landslide, slope failure, or a saturated like soil mass moving by liquidity down a slope, that's not considered a mud flow. It has to be a river of liquid and flowing mud on the surface of normally dry land to be considered mud flow. And then the collapse or of land along the shore of a lake or similar body of water as a result of erosion or undermining caused by waves or currents of water exceeding anticipated cyclical levels that result in a flood as defined above. So basically what they're saying, it needs to impact 2 or more acres and 2 or more properties. So if there's a home like a farm home out in the middle of nowhere, like all by itself, and it experiences a flood and it's not impacting another property, then FEMA would not deem that a flood and they would not have coverage, which is really interesting. Any questions so far? Nope. Okay. Great. So a little bit more background. In 1968, the National Flood Insurance Program was created. And until recently, they were the sole provider of flood insurance in the United States, except for excess flood. Now we do have access to private insurance markets for flood insurance coverage, and I'll briefly go over the private markets in a little bit on the next couple of slides. Within FEMA, every single rate ought to be the same because it's federally regulated. Because it says right here, flood insurances cannot be shopped like our other carriers. Everybody gets the same rate through FEMA. And again, this is through FEMA, not necessarily the private market. So now sometimes you might hear people say, well, my client already got a quote from, Allstate or wherever, so their rate should be the same. Why should I talk to anyone else? And maybe I would compare that to the tax code. The tax code is exactly the same no matter which accountant you use, but you go to two different accountants and you'll get two different results. So sometimes there are like tricks and loopholes as far as getting the flood premium through FEMA a little bit different from someone else. And basically that's just, understanding the amount of coverage that the insured needs, what deductibles they're comfortable with. So there is flexibility in moving coverages and deductibles to lower a premium if we need to get it to a certain amount. But with FEMA, if you go to two different insurance companies and you have the same coverages and the same deductibles, you're going to have the same rate, unlike with a homeowner's insurance policy.
I don't know. Prosper was much, much more competitive and a much better price for a much better policy than State Farm.
Well, I really appreciate you saying that, Jean. That's awesome. And I'm speaking specifically to FEMA. When we now that we have access to that private market and we're able to use the private market, it is way more competitive most of the time compared to FEMA. But thank you for saying that. I appreciate that little shout out.
Personal experience.
I love it. Those are the best, right? All right, and then flood. I mean, we all know this. It is not covered under your homeowner's insurance. And since standard homeowner's insurance doesn't cover flooding, it's important to have protection from floods that can be associated with hurricanes, tropical storms, heavy rains, even rapid snowmelt, which we don't really have around here. I would even say a city sewer line bursts and causes a big flood in a neighborhood. That can also fall under the flood as well. One thing I always want to stress to realtors, and I probably do it way too much, but there is no such thing as a no flood zone. So anywhere in the United States, in the state of Virginia, a no flood zone does not exist. You have a low risk, which can also be called preferred risk areas, or you have the high risk areas. So one thing you never, ever want to say as an agent is, great news, you're not in a flood zone and you don't need flood insurance. Two reasons. One, like I just said, there's no such thing as a no flood zone. It's low risk or high risk only. And the second is a third of all flood insurance claims happen in the low risk or preferred risk zones. So much better language to use is, great news, you're in a low risk flood zone. You can get flood insurance if you want to, and it's not going to be a part of your loan or impact your monthly payment. So it wouldn't impact their debt to income ratio because they'd be paying out of pocket. And the preferred risk insurance policy, they can get at a really reasonable rate. Right now, through FEMA, if they have the highest level of coverage for both their dwelling and the contents, and just the standard deductible, I think it's like $500 a year. And then they, like I said, you can always adjust the coverages lower and the deductibles higher if they want to have a lower premium. But again, no such thing as a no flood zone.
I have a question.
Yes.
Correct me if I'm wrong, but there are a lot of regular homeowners insurance policies that will not cover you for a burst pipe. I mean, they'll cover you for some of it, but not the actual damage from the flooding. Now, wouldn't that be where a flood policy could come in handy?
No. Homeowners insurance will cover it. Sometimes you have to have a rider. They're going to cover the damage from the water caused by like the pipe burst. And then your home warranty, I think, would actually like cover the plumbing or pipe burst, but that would not fall under flood insurance. Flood insurance has to be like rising water, the inundation of rising water. Did you have an experience with that or something, Jean?
I just didn't know which one covered it.
Crap, you
because
kidding me?
I had flood and I had regular insurance on the house, and I didn't know which one it was actually covered by because I had both.
Gotcha. So the flood insurance is going to cover you for like that rapid rising water outside your house. Your homeowners insurance should cover the damage for a pipe bursting and causing the water damage in the house. And if it's a backup issue, like a water sewer backup issue, that is an endorsement that is typically added to the policy, but at Prosper, we usually put it on every single policy because water is expensive to remediate, and it's something that is actually kind of common that happens. Good question. Good question. So a couple of flood facts. Floods are the #1 natural disaster in the United States. And there is a 26% chance of a flood claim happening during the life of a 30-year mortgage in a high-risk zone. So that's higher than a fire chance of a fire claim. It's only 9%. And, people would be upset if we tried to sell a home policy without fire insurance. But then sometimes we do try to sell folks, the flood insurance just to cover them in case, and they don't want to get it, which is interesting to think about from a statistical standpoint, because statistically you're more likely to experience a flood than you are a fire when you're in that high risk zone. And then flash floods happen in all 50 states. And again, that's why we recommend that whether you're in a low risk or a high risk zone, that you can get that flood insurance policy at a low cost to cover you, because you just never know what could happen anywhere. And I really always love to point out here in Hampton Roads, back when we had Hurricane Matthew roll through a few years ago. Do you guys remember that storm?
Yes.
Yes. And Windsor Woods, like totally flooded. And like, I think only like part of that neighborhood, the folks had flood insurance, but the other half was considered low risk. And a lot of folks didn't have the flood insurance coverage, which was really awful for them. So it's always better to just, cover yourself in the event of a flood happening. Okay, so now we're going to get to some definitions as far as it pertains to elevation. So base flood elevation, BFE, is what you'll see it listed on an elevation certificate. It's the computed elevation at which flood water is anticipated to rise during a storm. So the flood is sometimes referred to as the 100-year flood, which means that there is a 1% chance of them experiencing a flood in any given year, basically, which is what computes to the 26% over the life of a 30-year mortgage. So if you're in a high-risk flood zone, then FEMA thinks that you will have more than a 1% chance on an annual basis for the water to come up to the footing of your house. If you're sitting on a crawl space, then there's a 1% chance they think the water will touch your house during that time period. Now, every high risk zone has what is called a base flood elevation, which Ashley, that's what you were talking about, that 7.2 number, remember?
Yes, I'm looking at the elevation certificate from 2009. It says 5.9, but then we
Okay.
just had one done and now it's 7 feet. I don't understand what
I don't
that,
understand how it went up either unless they like filled in like the yard. I don't know.
okay.
But so that's where, so the base flood elevation is where they think water will rise to in the storm. So that's where they think like that 7 feet is like where the water will come up to in a storm. And typically the average here in Hampton Roads is 8 to 10 feet. And the base flood elevation on its own is not what's going to define how expensive a flood policy is going to be. So if you can see me, I'm giving a little example. Let's say that, let's use Ashley's example. Let's say you get the base flood elevation and it's sitting here at 7 feet. That's the base flood elevation. Well, let's say that the yard is sitting at, 5 feet. So it's a couple feet below the base flood elevation. That means that this home is sitting in a high risk flood zone because the dirt is lower than where they think the water is going to rise to in a storm. So it's going to go right through the house. Now, this home that's in this high risk flood zone, because it's under the base flood elevation, you want this property to be on a crawl space. Because if it's on a slab, it's going to be a super expensive policy. And you can see why, because the water's higher than where the house is sitting. And so what does that mean? That the water is just going to flow right through the home. That's what they're saying the risk is going to be. So they're going to bump up that premium. So let's take this house and raise it and add, a 3 feet crawl space. So now it's sitting up higher above the base flood elevation, and it's, has crawl space vents in it. So the water has somewhere to flow through. That would be a less expensive policy. So all of FEMA's premiums go to how high above or below the base flood elevation to the living floor is. So the higher above the base flood elevation, the lower the premium, and vice versa. A basement is a whole nother animal. A lot of it depends on the usage of the basement, what type of equipment is in the basement. If the basement is completely finished, that adds a whole nother layer to it. But typically basements are a little bit more expensive, obviously, than sitting up on a crawl space.
So the basement had a tiled floor and the cinder block walls were painted. And we were told that because of that, they considered it living space. So then that makes the policy more expensive.
Yeah.
As opposed to it. I mean, even though it wasn't actual living space. So I didn't really understand that.
I guess because it just had some finished areas down there. What, did you have any equipment down there? I missed if you said you did.
I mean, now the cellars had 2 sump pumps down there, and they did have some stuff stored down there, but they had shelving to put stuff on way up high.
Okay. Did you get a quote, Ran, on that property?
I did, and I think it was like 2,800 or something like that.
Okay. I mean, we'd be happy. I mean, I think you said you already backed out of it, but I was
we did.
happy to take a look at it for you too. Okay. But yeah, basements typically make it a little bit more expensive.
Okay.
So this right here illustrates what I just said. So the base flood elevation, I'm looking here. Let's see. Wave height so these are the different zones. We talked earlier about high risk zones. So you're going to see zones A and AE and V and VE. What you're going to see 95% of the time here in Hampton Roads are A zones. And A stands for accumulation, which is like your standard flash flooding or tidal flooding. So that's like wave height less than 3 feet. V stands for velocity. And you're going to see these homes, you know, located a couple of blocks from the beach. They're going to be, you know, more at risk for wave wash. So anything above, you know, 3 feet waves. And we like to joke that VE stands for very expensive because these policies are going to be more expensive than those in the A zones. They should be built on the stilts or pilings, which you see right here. So if this home is in a V or VE zone, you want it to be raised up. Because if you're not, you could be looking at like a $10,000 flood insurance policy. And as I just mentioned, the homes in the A or AE zones, they need to be on a crawl space. So the water has somewhere to flow through. So this looks like this building was unelevated. So there's no crawl space. And where's that water gonna flow through? Right through the home. So that's gonna make it an expensive policy. One thing I do like to, I think it's interesting down in Sandbridge, you'll see a lot of homes that should be on stilts or pilings because they're, you know, down on that little island down there, which can flood really easily. And a lot of them that are on the pilings have the downstairs that have been enclosed. Most of these homes are probably vacation rentals that the owner rents out, you know, during the summer and the week. And they've enclosed the bottom to add additional living space. So maybe there's like a rec room or a garage, extra bedroom. And that is definitely something that would drive up that flood insurance premium. But like I said, most of the owners have made the decision to do that, probably because they can get more money on the weekly rentals and they'll be able to rent it out for more. So if they have a more expensive flood insurance policy, they're probably like making more than what they pay a year in flood insurance. So it makes up for them. They're not worried about having that additional premium to pay because they're getting the revenue from, you know, being able to rent it out for a little more.
I have a question. When I'm looking at properties to see what like flood zone they're in, I don't understand, like we're looking on rain, the flood maps. You have some that are in like these yellow areas. It says levee protected. And then you've got like the purplish lilac colors and it just says floodplain. Like between those two, I mean, I know neither of them are good, but is one worse than the other? Like levee protected, I think New Orleans and it scares crap.
I would need to see what you're talking about. I don't have access to rain, so I don't see those maps.
Okay.
Yeah, if you want to send me like a screenshot though, I'd be happy to take a look and dig deeper into it for you and find out.
Okay.
Yeah. So, I mean, the lilac floodplain, a floodplain means a high risk area. I don't understand the levee protected though. So I can find out and get back to you. If you, my email should be at the end of this. So you can copy my email down and send it to me.
Okay.
Okay, great. All right, so the elevation certificates, I'm gonna go over what they are, and then I'm gonna unshare my screen and reshare it, and we're gonna go over like an elevation certificate. Actually, let me just go ahead and pull that up. Okay, and I'm gonna unshare. All right, can you guys see the elevation certificate?
No.
No? Oh, wait a minute, I hit share. Can you guys see it now?
Yes.
Okay, good. All right. Do you still see the elevation certificate or did my PowerPoint pop back up?
It popped, PowerPoint popped back
Okay,
up.
I got it in the slideshow. That's what I was afraid of. All right, now you see the elevation certificate.
Yes.
All right, thanks for being patient with me here. So the elevation certificate is going to show where the lowest level of the house is compared to the base flood elevation for that specific location and address. So I'm going to scroll down. So right here is the information from the flood insurance rate map, the FIRM. And you will see the date in which this was like last revised. So this was 2017. The flood zone that it's located in, AE, so high risk, and then the base flood elevation right here. That's that number we've been talking about is at an 8, which I mentioned is like the average here in Hampton Roads. So the elevation certificates are always completed by a certified engineer. So when we are doing the quote, we look for this number right here, the base flood elevation. And then we also want to find out if the home is elevated and the type of enclosure that it has. So it looks like there is a crawl space that's 1,618 square feet. It says there are 0 flood openings within a foot above the adjacent grades. So that gives me a little cause for concern. Because if it's on a crawl space, there should be crawl space vents, but maybe they are higher above that 12 inches, which FEMA, in order to be compliant and get like the best rate, the flood openings need to be within a foot or 12 inches of the adjacent grade means the dirt outside of your house. They need to be within 12 feet. So I guess that's why it's counting it as 0. I'm assuming this home, the crawl space vents are higher above that 1 foot. And then there's also an attached garage, which they will measure the square footage of 336. And the same thing, no crawl space vents within a foot of the ground outside. I've got another elevation certificate. I'm going to open it too and see if it's any different. I want to just give you guys a couple examples of some things to look for. Did the new one pop up for you? Did the new one pop up? Okay. Can you all see it?
Yes.
It's
It
moving.
still says 0 flood openings.
Yep, this is, yeah. So I guess this is really strange, but they must be all a foot above, but then their crawl space is only 974 square feet. I'm trying to find one that has the openings on there. That doesn't make sense to me.
So I have a question about that. So the house that we backed out of also did not have openings. I mean, it did, but they were too high. But there's a basement and a crawl space, like half of there was like a half basement. You had to go in through the garage and you went down steps into a basement, or you opened up this door. It had a very high crawl space. Like you could just kind of bend down and I could walk the crawl space because the main living floor was 9 feet above the ground.
Wow.
But the vents were above, they were higher than 12 inches.
Yeah, so they wouldn't count for them on the elevation certificate. Because
can you move those, or somebody was explaining something to me about, I don't know, closing them or open. I didn't understand what he was talking about.
You could close them, but then you would need to reinstall new ones. You can reinstall like the FEMA ones that are within a foot. And it's like $350. I know this, I learned this yesterday during a course I was teaching. There was a guy who worked for JES. And he said that they will install like the FEMA, approved or a FEMA compliant flood vents within the 12 inches from the adjacent grade, and it's $350 per vent. So you would like block off the higher vent and install another one. Does that make sense?
Yes.
Yeah. Okay, so here's another one. This one is just really difficult to read. It's much older, but you can see right here. So this property has 1,388 square foot of crawl space. So this is not necessarily living space. This is crawl space square footage. And then there are 2 flood vent openings that are within that one foot above the dirt. And the total area of flood openings equals 443 square inches. Now with FEMA, in order to get like the best rate, like to be compliant, so to speak, they want to see like, I think it's like half of the square feet of crawl space. They want to see like the half of that in square inches. So in order to get the most compliant rate, 443 will help lower it. If they wanted to lower it even further, they would need to install a couple more crawl space vents to equal like that 6 to like, I think it's like close to 700 square feet is what the half would be for this. I mean, square inches rather, in order to get the best quote. But these are some items just to look out for on an elevation certificate. You want to, and this base flood elevation is 7.7. So it's a little bit lower than the typical average. This home, I was trying to see, oh, it doesn't have the address. Oh, it's in Windsor Woods. Aha. Yeah, one of the ones that flooded with Hurricane Matthew. And then again with the garage, they have the garage square foot, but no openings. If they had openings in the garage, that would also help bring the rate down. So those are the items you really want to be on the lookout for when looking at an elevation certificate, to see, to kind of get an idea of whether this quote's going to be a little bit higher or lower. All right, and then one of my colleagues who sent me this elevation certificate here, this is for a home in Norfolk. So it didn't have the crawl space vents within a foot. Let's just see what the quote would have been. $2,873. So pretty expensive. I would say for areas in Norfolk, that's probably like pretty spot on around Norfolk because it does flood easily. But I can almost guarantee you that if they had crawl space vents within a foot with like the compliant square inches, that premium would be cut exponentially. I actually had, I'm gonna reshare my PowerPoint with you guys. Give me one quick second. Hold on, it's making me share from the beginning. Sorry, guys. So I can go to the next one. A few years ago, I was doing a quote for a home in Chesapeake, and it was in a high-risk flood zone on a crawl space, and it had the crawl space vents within a foot of the ground, and it was, accounting for them, but they still couldn't get that premium to go under $1,200, and it was causing the buyer not to qualify for their loan. It was knocking them out of their debt to income ratio. So after some back and forth with the insurance company, we determined that if they added a few more cross space vents to equal the correct square inches of vents to the crawl space, it would lower the premium. So they did just that. They had to have an engineer go out and redo the elevation certificate, and the premium literally dropped in half. It went from $1,200 to $600, and they were able to close on their home. So, and again, it's like about $350 per vent for like the FEMA flood compliant ones. It's probably a little less expensive for just like the, I guess, non-FEMA ones, but yeah, so it makes a huge difference, and you'll save money over time by not overpaying for your flood insurance.
I have a question. It's like, we're talking about the price of the premiums, but where there's still the deductible that you have to be concerned about. And how does that play into the cost of the flood
What
insurance?
do you mean you need to be concerned about it?
Well, so you file a claim and you've got like a $5,000 or $10,000 deductible.
Well,
right?
that's only if you choose to have a $5,000 or $10,000 deductible. You can have it as low as $1,200.
And that means that your monthly premiums are higher, right?
So, yep, the deductible, if you increase the deductible, your premium will lower. So yeah, so if you want to have that lower annual premium, then yeah, you can increase the deductible, but you have to ask yourself, like, if you're going to get into a claim, are you going to have that $5,000 or $10,000 sitting there to pay the deductible? And that's something that, you know, our sales agents at Prosper, they discuss that with the clients and only are going to do what they're comfortable with. If it's a matter of getting someone to closing, I mean, we'll increase the deductible for closing and then have the client, you know, call in and decrease it after the fact.
Okay.
Mm-hmm. Yeah. That's the only time we would, and we will do like a $5,000 or $10,000 deductible is if we have to get someone to closing, or if the purchaser is like, yep, that's not a problem, we've got that. So then we'll do it and they'll have the lower premium. It all depends on every person and their needs. But
Okay.
it can be as low as like $1,200 to $1,500. So.
Just like car insurance.
Exactly, just like car and homeowners insurance. Mm-hmm. And then here we have the different diagrams that show the different elevation levels. This is the elevated without enclosure. This is like the stilts and the pilings, which you're going to want to see in those V zones that we were talking about earlier. Elevated with enclosure. This could be a rating for an A zone or for a V zone. This could be like a home in Sandbridge where they've, you know, enclosed it here to make a garage or additional living area. So this would be more expensive policy than this one because it's got that enclosure. And then we have the walkout basement. So it's like the area below the elevated floor is enclosed partially or fully on a full story foundation. And then this last one, this is a diagram 8, which is, this one is probably the one we'll see most of on an elevation certificate, which is the crawl space elevated. And you can see the vents here where the water can flow through. Okay, so I mentioned earlier briefly about private market flood insurance. So historically, private insurers did not cover flood risk due to the fact that flood damage is, you know, generally catastrophic and hard to predict and set rates. However, in the last several years, private insurance companies have dipped their toe into the market, so to speak, and is now a viable option for homeowners and home buyers to satisfy their mortgage requirements and get a private market flood insurance policy. There are only 2 mortgage products that will not accept private market flood, and that is FHA and USDA. They are government-backed loans. They want a government-backed insurance policy. VA will accept it. They used to not, but now they do. And maybe that's hope for FHA and USDA in the future. So those are the only two times we would run into an instance of a mortgage company not accepting a private market flood insurance policy. And there are a lot of great things about the private market. Jean, I'm pretty sure that's probably what we were able to put you with and save you money for your flood insurance policy compared to State Farm. I don't even know if State Farm has access to their private market flood. And we at Prosper, we write with 4 different private insurance carriers. So we have multiple options that we can shop through. And what's awesome about the private market is it can offer higher amounts of coverage, and they have like additional coverage, like more robust coverage options that kind of mirror your homeowner's insurance policy. One of the biggest ones is that a private market flood insurance policy will extend coverage to any additional structures sitting on your property. So let's say you have a really nice detached shed, a detached garage, a swimming pool, a mother-in-law suite. You will automatically have a percentage of coverage that extends to protect those structures from a flood. With a FEMA flood policy, they only cover the dwelling and your personal belongings inside. So if you wanted to get coverage for a separate structure on your property, you would have to purchase a second flood insurance policy, which could be, and they're more expensive, like adding additional onto it. So you're paying more premium for 2 policies just to have that coverage. And a swimming pool wouldn't even be an option because they wouldn't even cover a swimming pool. And then their contents coverage with the private market is on a replacement cost value. So they'll replace your, really nice expensive rug. Let's say you paid $2,000 for that rug. They'll replace that $2,000 rug with another one. With FEMA, it's at the actual cash or depreciated value. So maybe you get $800 for the rug instead of $2,000. So that's really, really huge as well. And again, a lot of the times the premiums are a lot lower and competitive compared to FEMA. And another amazing thing about the private flood market is they use different rating factors and rules than the National Flood Insurance Program, which means that they do not require an elevation certificate. So as is a lot in the real estate industry, time is of the essence, and maybe someone needs a quick flood insurance quote or policy put into place. And let's say this home has been newly mapped or revised into a floodplain and an elevation certificate isn't available, or the sellers don't have one, and there's not time to get an engineer out to do the elevation certificate. You can go through the private market insurance and get a quote and a policy without having to get an elevation certificate. With FEMA, they require it if you're in a high-risk flood zone. They will not even give you a quote without the elevation certificate. So that can be a huge time saver if you're, like I said, in a tight spot and really need to get a quote or a policy put in place. We've had that happen all the time where it's like 2 days before closing and somehow they're just now finding out they're in a high risk flood zone and they need to get a policy in place quickly. And if they needed an elevation certificate, that wouldn't have been the case because it takes time to get out there and do that. And it costs money. And if you guys have any questions about private market flood, feel free to reach out to me. I mean, I can connect you with one of our agents. They are very well versed in flood in the private market. And that is it for today, guys. Here are some resources that I have that you can go to and look at flood maps. If you really just want to know if a home is in a high risk or a low risk zone, if you're like me, the flood maps at FEMA give you a little bit of a headache. So you can always reach out to me, and again, I can connect you with an agent, and they can look that up for you very quickly. And below is my information and email. And Ashley, if you want to send me like a screenshot of the rain flood map, I'd be happy to take a look at it and dig a little deeper for you to understand what those different colors mean for you.
Okay, I will do that.
Thank you so
And-
much, Sarah. I really appreciate it.
Oh, you're welcome. And I'm looking right here. I just want to, before you guys get hang up, I just want to take note who's on here with their camera. So I can send you the, I'm going to stop sharing so I can see you all. So I see Jean. And I see Letitia. Thank you guys for turning on your camera. P-I-N-E-R-O. Star. Hi, Star. I appreciate your patience. So what I'm going to do is I will be emailing you all the form, the course enrollment form. It's going to come from DocuSign, so it's not spam. Don't delete it. That's where I'm going to have you fill out your course enrollment form, and then once you get them, I get them all back from you guys. I will submit them to Alpha College, and they will put this on your transcript. Kimberly, what's your last name? Because it's cutting it off.
It's Shepherd.
Shepherd. There we go. Thank you.
Let me give you the right spelling just to make sure that we don't have any
I
issues.
see S-H-E-P-A-R-D.
Yep.
Okay, and then Christy Hall.
And do you have all their email addresses?
I can look them up.
Okay.
Mhm.
Okay.
Yeah, I can do that. If not, I'll reach out to you. If I
Yeah.
can find them.
Yeah.
All right, so Kimberly, Jean, Letitia, Star, Christy. Perfect. Awesome. You guys will all be receiving the course enrollment form via DocuSign. Thank you guys for showing up today. It was great to see y'all.
Sarah,
Bye,
can I ask
everybody.
you one more quick
Have a great
question?
day. Bye.
Oh, wait, Ashley wants
Oh,
to ask
yeah.
you something.
Yeah.
One more quick question. I've seen like several homes that have these things that they had made they call them floodgates. They're like these metal things that go like slide down in front of garage doors. Have you heard of this? Does this help lower premiums? Does this do anything?
I would need to look. I'm gonna have to ask someone about that. I'm not sure what the flood is. And then you said on a garage?
Yeah, because the homes are in an area where,
Writing
kind of
this
like
down.
dips down, the driveway kind of dips down. And so they had these floodgates made to keep the water out. And I didn't know
Okay.
if that helps lower premiums or anything like that.
I don't, what I can do is, give me 1 second. I'm gonna pull up that elevation certificate again and see if they have anything listed on here about a floodgate. And then I can also ask one of our agents if like during the quoting that they have a place to put that in there. Cause that's the only way it would impact the premium is if there's somewhere, to document that it's there.
Okay.
And
It's probably not.
yeah,
I was just
don't
wondering.
see anything on here about it. But that I'm still gonna ask. I wrote it down, so I'll talk to one of our sales managers about that.
Okay.
Okay.
All right. Thank you.
Thank you guys. Have an awesome day.
You too. Thank you. Bye.
All right, bye.